Hello and welcome everyone to the week ahead commodity report, where we of course will be reviewing the markets for the week ahead. Now, as we go into next week, we are transitioning into June. We're almost halfway through the year now and 6 months into the new commodity super cycle, which has certainly supercharged our gains at the Gold and Silver Club for ourselves and our members, consistently banking close to 10,000 points profit per month. And of course, for every one lot that you'll be trading, that's $100,000 of profit. For every 10 lots that you'll be trading, that's $1 million of profit. Many of our members and clients of the Gold and Silver Club have already made between 6 and 7 figures so far this year, and we still have another 7 months to go. In fact, here are just some of the testimonials which have been flooding in from our clients, sharing their successes and achievements at the Gold and Silver Club throughout 2021. Now, as we go into next week and transition into June, it's the final month of the second quarter. And of course, low interest rates, rapidly surging inflation, massive stimulus, and the global infrastructure spending boom are 4 of the major themes that are beginning to dominate and shape the trading landscape in 2021. Last week, data showed personal consumption expenditures price index, which is the Federal Reserve's preferred gauge for inflation, that jumped 3% in the year to April. That's the biggest annual rise in the PCE price index in almost 30 years. That, of course, confirms fears that the cost of living is continuing to surge at an alarming pace, whilst the labour market remains weak, wage growth is stagnant. Earlier this month, the Fed's other gauge of inflation, the Consumer Price Index, that accelerated at its fastest pace in more than 12 years, with CPI jumping a sizzling 4.2% from a year earlier. The increase in the annual headline CPI rate, that was the fastest since September of 2008, whilst the monthly gain in core inflation, that was the largest since 1981. Just like the US, nearly every country around the world right now is experiencing a rapid surge in inflation. Canada's annual inflation rate hit 3.4% in April. That's the highest in nearly a decade. Meanwhile, on the other side of the pond, UK inflation more than doubled to 1.5% in April. That's up from 0.7% in March, whilst the Eurozone inflation increased year on year by 1.6% in April, up from 1.3% in March. So far this year, commodities have positioned themselves firmly as one of the best performing asset classes of 2021. That's with a total of 27 commodities ranging from metals to energies to softs, racking up double and triple digit gains. On Friday, gold prices, they vaulted back above $1,900 per ounce, notching up a 4th consecutive week of gains. Gold has now crossed that finishing line for May with an 8% gain, which is the biggest monthly gain since July of 2020. Since March, gold prices, they've rallied now over $230 from their recent low of $1,674 an ounce. That's an impressive gain of 13.7% in the space of 2 months, while silver prices have now rallied up an impressive gain of over 80% in the last year. Silver prices, they're currently trading above $27.70 per ounce. That's a whopping gain of 86% from 1 year ago, when the spot price was trading at $14.50 per ounce. Elsewhere this month, we've seen many other commodities ranging from aluminium to copper to palladium to iron ore. They have surged past their all-time highs. Crude oil prices, they're up 265% from this time last year. Lumber prices, they've quadrupled in 5 months, climbing over 500% from their 2020 lows, and this is just the beginning. There are plenty of reasons why commodities are on the move, but the key driver is rising inflation, which has spurred significant demand for assets with inflation hedging capabilities. The rise in demand for commodities, that has been supercharged by a vaccine-led economic recovery fueled by massive amounts of global stimulus into green energy and infrastructure projects. That's all against a backdrop of tightening supply across many high-in-demand commodities. Commodities are once again starting to attract a lot of attention on a scale not seen since the global financial crisis of 2008, as retail and institutional interest continues to grow, especially considering that the fundamental backdrop for the entire commodities complex, that remains extremely bullish as we transition through a new commodity super cycle. Extraordinary times, they do create extraordinary opportunities. And right now, as traders, we are living in some of the most rewarding times ever in history. Whichever way you look at it, the case for commodities in a well-diversified portfolio has never been more obvious than it is right now. So with that, looking ahead into next week, the biggest market moving events that traders will be watching closely for clues on the market's next big moves, those include ISM manufacturing PMI data, ADP employment change, jobless claims, as well as the biggest event of the week, that's non-farm payroll data on Friday. Right now, we're moving into a new trading landscape. If you follow the wrong strategy, you will end up wasting lots of time, money, and effort and have no results to show for all of your hard work. This is not a buy and hold market. Right now, we're in a low interest rate, high inflationary environment, combined with higher than usual volatility, which is here to stay. Low interest rates mixed with surging inflation is a lethal cocktail that's guaranteed to erode the value of your investment returns if all you do is buy and hold in this market. So don't get lazy and let inflation devalue the money that you've worked hard for. Always make your money work as hard for you as you've worked hard for it. Configuring your trading approach correctly in the current market conditions, it's not an option, it's now a necessity. If you want to thrive and not just survive in this new trading paradigm, then you need to adapt a research-driven approach to the market in this current economic landscape and build your portfolio around high income generating strategies designed to capitalize on the short-term macro-driven opportunities. So with that, let's move over to the charts and we'll talk you through exactly what we're looking at here as we head into a new week. First of all, as we go into next week, we discussed with you previously that copper was on the radar here to build positions, given that we get the usual corrective price action towards the end of May, as you see typically outflows and profit taking right at the end of the month. Fundamentally, copper was a great market to build further position in. We've continued to see hedge funds and money managers have a very strong overall net long position in this market. We have trillions of infrastructure spending, which is going to be coming from the USA. Alongside that, with low interest rates and inflation running hot right now, this has been a perfect trade opportunity to capitalize on. In the last week, we built 4 positions on copper. We've also built into further positions on palladium. That banked us last week 2,350 points of profit. So of course, for every 10 lots that you'd be trading, that's $235,000 of profit. For every 1 lot that you would be trading, that's $23,500 of profit. And those were all trades that were just executed last week. So we've seen a nice pop higher here on copper prices, 4% move to the upside over the last 4 days here. Then if we move it over to palladium as well, we talked you through this. This would be a great market to have on your radar. Look at opportunities to then buy in once the dust has settled after the end of month. Usual profit taking that you tend to see right at the end of May here. We've seen palladium under pressure over the last couple of weeks. Bear in mind that palladium and copper, they've broken out to all-time highs over May. We were waiting for corrective price action to build further positions. All of our trades that we established in the last week, those trades are all in profit into Friday's close. We've booked some partial profits and they are protected as well. And you can see here with the breakout that we've seen last week, we've now had a 1.5% breakout to the upside here on Friday. We've now managed to clear above quite a lot of resistance. I would look for a continuation as we go into next week here, and still really would perceive dips as buy opportunities on the industrial metals here, which brings me over to silver. As you know, we've stacked into a number of positions on silver over the last couple of months, 12 positions on this market. Really nice solid close again. What we tend to see time and time again on the precious metals is that during the course of the London session, they tend to be vulnerable and under pressure, and then they immediately get bought as you go into the US session. Practically every dip right now, later on in the day, it gets bought into very shallow retracements, and if you're not fast on those moves, you miss out on the opportunity to build further positions. Many traders are staying out the market. They're waiting for further corrective downside. We're just not seeing it right. For 2 months, that's been the case, where many traders out there have been calling for much lower prices. They've been warning not to get into the metals, that they look like they're about to roll over. You name it. Reasons have been given out there to not get in. Head and shoulders pattern, bear flag pattern, and all the rest of it that we keep seeing out there from these outdated technical strategies that end up basically having no exposure, or they get panic sold out of position, like we saw right at the end of March, where many traders out there panic sold out of the metals, expecting to be able to buy back at much lower prices. We never saw that, and prices prices have continued to accelerate over the last month here to break out to 5-month highs. So if you did end up panic selling out of your position, you now don't have exposure when gold and silver are up over 8.5% in the last month and breaking out to 5-month highs, whereas we've continued with our clients at the Gold and Silver Club to build positions throughout the last couple of months, scaling in and stacking all the way here as we've continued to explain to you on gold and silver asset of the day in the week ahead commodity report. So I do hope that many of you have been able to capitalize on that as well, and you haven't been scared or shaken out of positions, because we continue to see each week gold and silver prices driving higher. We in fact saw a significant increase in gold net long positions in the last week from hedge funds and money managers. You can see even again here into Friday's close, this is a very much a hated rally at the moment, because so many retail traders do not have exposure on gold or silver because they got squeezed out on the sell-off that we had right at the end of March before we saw that capitulation and significant inflow come back in again as we went into the first day of a new quarter at the beginning of April. We explained this in detail with you on gold and silver asset of the day at the end of March, beginning of April, where we were building positions that would be a gift for you to get in at the same levels that we were. Silver between $24 to $25 per ounce, and we saw gold at that time was trading between $1680 and $1700. Obviously now gold prices are up over 2,000 points or $200 since we talked you through that trade opportunity in a lot of detail at the end of March, beginning of April, and silver prices, they're now up over $3.50 since those lows that we discussed with you when the price was at $24 per ounce. So you know how it goes here with the metals here. We've continued to talk you through this. Each time we are seeing selling pressure. We got that at the beginning of last week across the board. We saw that on platinum, on palladium, on gold and silver. We took the opportunity on these dips to add further positions on these markets, particularly with the industrial metals last week. So copper was a great opportunity to build positions before we had the 3.5% breakout later on in the week. It was the same scenario with palladium as well, where we were able to establish 3 new positions just in the last week, which are all in profit. In fact, on those positions combined, they're up over 2,500 points into Friday's close there, and we've also been able to build into further positions over the month of May on silver and also gold here as well, which has worked out extremely well. So if you look at gold here, we are at quite a key zone as we head into a new week. Bear in mind as well, we've got the USA and the UK on public holidays on Monday, so you're going to see thinner liquidity, which can create exaggerated moves in the market. The last time we were at the 1900 level like this on gold into a close when we went into a weekend, that was where we saw a gap higher and a reattempt to break out above the previous swing highs of 1960. So within 3 days, gold prices, they broke out over 600 points to the upside before they then had some pressure, and then we saw corrective price action throughout the rest of January. But just bear in mind, we're at quite a key zone here where if we do continue to push higher, we may quickly come up to similar levels that we tested going back towards the end of December and beginning of January. And of course, if you were able to take out those swing highs, then we're really going to see gold turning exponential into the summer months here. So it's definitely one to have on the radar. One of the biggest obstacles that holds back 95% of retail traders from achieving their desired success is not having access to professional strategies and institutional level data and market intelligence to make confident decisions with accuracy in these highly profitable markets. If you follow the wrong strategy, or worse still, you lack access to the right data at the right time, you will end up wasting lots of time, money and effort and have no results to show for all of your hard work. If you want to thrive and not just survive in these highly macro-driven markets, you need to adapt and utilize a professional, research-driven approach to the market. Having access to the right data at the right time is the single greatest difference between ordinary and extraordinary results. Trading like every other misguided retail trader, utilizing outdated technical analysis and gimmicky technical indicators will not work. It's not a buy and hold market, it's a trader's market. And as traders, we have a superior advantage to capitalize on every highly lucrative move fast. You need to know exactly when to buy, when to sell, but also most importantly, which asset class to focus on and when. The greater your data intelligence, the greater your edge in navigating these fast moving markets with superior levels of precision, confidence and profitability. We still have another 7 months to go of this year, so never underestimate what you can achieve over the next 3 or 6 months from now with the right guidance and mentorship. You can always give people the right skills, knowledge, and strategies to transform their financial future, but one thing you can't give back to them is the time they've lost. Time is the most valuable commodity we have. Make sure you don't waste it. So if you want us to help you achieve the same level of wealth and success as our clients at the Gold and Silver Club, then complete the application form to learn more about the professional mentorship program. As a member, you get access to our exclusive live trading room webinars. You get access to our real-time trade ideas, institutional research and market intelligence, access to our private Members Academy website, and also support and one-to-one mentoring. For more information, just go to www.jointhelivetradingroom.com. The link is also below this report in the description, so just click on the link, make an application, and we will of course get in touch with you ASAP. And do make sure you subscribe to our YouTube channel, that way you're always kept updated with all of the latest commodity reports.